slight correction. Whether this correction runs further, I think it's just forming a flag.
Well, and also if we zoom in on this, so we come to, by the way, this has been working, as I said to you before the call, this has been working really well. But if we kind of zoom in on the same chart, I don't see why this would work that well, right?
No, it shouldn't be working wiggle for wiggle, but it appears to be right now, which is, see how good some of
I just made a $27 ebook in 2 minutes using AI. Watch how I did it so you can do it too. Here I am.
these people are, and some of them have been absolutely amazing. So anyway, enough about Real Vision. Let's go and look at Raoul and Julian shooting the shit. I hope you enjoy it. I'm traveling this week, so I thought it's a nice way for you to see behind the paywall. Now, bear in mind, this was recorded about 2 weeks ago at the end of May. So obviously some things have changed, but you'll get the idea. We can't give away all the alpha immediately.
Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together.
Hey everyone, welcome to Shooting the Shit with Raoul and Julian. It's always fun because we're catching up. I've just got back today. So you put out MIT last night. Go through some of the basic stuff because we need to go through this for GMI later anyway because we've got to ride GMI this weekend.
Yeah. So let me pull up the Prez. Do you not watch the video? What's wrong with you?
Mate, I'm so bored of you.
That should be the first thing you do in the morning is MIT. It's on. Are we sharing that yet? Not yet, huh? So I think some of the just very, very high level stuff, I'm not going to go through the grid. I think the only thing that we really need to cover is that basically things are now going according to plan. And this is not updated from yesterday because during the presentation, 2 of the regional PMIs came out. We're still waiting for Chicago tomorrow. But if we just take all the others and you put them into this chart, this white line is significantly higher. So the rebound that we were expecting, as I showed you yesterday, Dallas came in stronger than expected. This is all going. You remember when I was calling?
Yeah, why this matters, right? This is the driver of alt season. This is the driver of a lot of things. This whole ISM pickup story, which everyone's been wrong-footed on because everyone was like, no, it's going to go to zero. We're going to have a recession. It's awful. And we've been saying the opposite.
Yeah, and so all this data is just beats. And so now SESI's, exploding higher. And the point, why this matters, as I had said in MIT, which of course you didn't see, which okay, is that like we had apart from the
I have better things to do. To wash my hair, maybe cut my fingernails,
laundry, all those horrible things, wash dishes. But we had just like on the way down, we had to reprice. Now we have to reprice stronger growth momentum, right? So I think that this is really positive, and obviously this is just heading higher into the summer months. Not going to go over financial conditions, but I think the only 2 charts we really need to talk about, or that we probably care to talk about. By the way, it's so funny. Look at this. This is GMI financial conditions versus Truflation. I'd been saying that the numbers are going to bottom. Then I got the email from the head guy there. What's his name?
Stefan.
Yeah, Stefan. And he said this was on the 20th, so this was last Tuesday. And look what he says. Inflation is climbing. So the craziest thing about this is that, well, who needs Truflation if you've got GMI financial conditions?
Now, financial conditions is bond yields, the dollar, and essentially oil or major.
Well, it's not. Yeah, it's commodities. So basically, what I did is it's a regression basically on the ISM, and then I put it on other things. But you have to take the basket of commodities, so oil, copper. But what you do is you regress on the residuals of the regression to avoid multicollinearity. So it's several different commodities, but some are weighted more heavily than others, and oil is one of those.
Now it came off a lot, right?
Yeah, it came up.
What impact is that going to have? That's the impact that it's going to have on global M2. Ever wish you could access cash without selling your Bitcoin? Ledn makes that possible. Ledn is the global leader in Bitcoin-backed lending. Since 2018, they've issued over $9 billion in loans, and not a single Satoshi of client funds has ever been lost. Here's what makes a leaden loan different. With a custodied loan, collateral is not lent out to generate interest. There are no credit checks. Funds in less than 12 hours, no monthly payments, and repay whenever you want with zero penalties. And they just don't talk security, they prove it. Leaden offers proof of reserve reports verified by a top accounting firm every 6 months. Leaden is 100% focused on doing one thing better than anyone else, giving Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at www.ledn.io.
That's right. And so what's interesting about that, I was looking at it this morning, is that we have the same chart versus Bitcoin, right? 3 month on 3 month. So the 3 month rate of change, which is not in this pack. But that top point there, or the high, is actually August, which then stacks up with the V, which then stacks up. Sorry, I had a lot of charts in this pack.
Really, that's surprising. You generally are quite light on charts.
I know, which I think then stacks up with this, right? Because this is not, Global M2 here is not updated for the dollar's recent move higher. And I actually think the dollar may head a little higher here. I'll show you that chart in a second. But if that's right, then this top bit in Global M2 will come lower and should set us up for that corrective phase, which that other chart also matches. And as I pointed out in MIT,
but financial conditions leads M2, right?
Financial conditions leads M2, but here you're talking about the rate of change versus, remember, it was that whole thing of the everything code dominoes. There's a bit of a difference in the lead versus rate of change versus outright. And so basically what here they would line up to say around August, we should see something, but we have to see, right? It really depends on what the dollar is doing. Because if I just shift,
but we're expecting financial conditions to continue to ease, right? Because we think there's another leg lower in the dollar. We think rates either stay flat or move lower.
Yeah, so that's right. So, but if we just skip back up here, I'm going to come back to the dollar. Where are we here, right? So we're coming lower. Obviously, yesterday we moved a little bit higher, but I think that ultimately the trend's lower. But I also think over the next, if you look at, guys, I'm just going to change screens here. That's all right, to Bloomberg. If we look at the dollar here, right? I mean, we've counted down to wave 5 and we had a 913.9. And this is basically where you and I were like, this is going to go higher. The chart's not on the screen, is it? No, it's off.
Yeah.
Okay. Is it? Oh, there it goes. Now it's back.
Yeah.
Then it came lower, and then we unlocked a wave 2, or now we've unlocked a wave 3 of potentially 5 higher. I don't know if that plays out, but you can see that the counts are all stacking up here pretty heavily. So in the event that the dollar does move higher to, let's call it 104, which DMARC wave count suggests, which seems a bit high to me, but nevertheless, this would unlock that corrective period,
which is looking like August into September, maybe. We don't know the length of it yet.
Yeah, so that's why I was saying in MIT, the next move in the dollar is going to tell us everything that we need to know about, the ISM, when that peaks out, everything else. But I think whether this goes higher or not over the medium term, not even medium term, I should say over the short term, we still think it goes lower. The other thing I was just going to point out,
which sets us up for phase 3 of the banana zone. So phase 2 correction would be this. If it continues to trend sideways or a little bit stronger, that would be a corrective phase when everyone starts thinking it's all over, we'll give up now. And then we should get phase 3, which is the final leg in the dollar, potentially a leg lower in rates and the more speculative frenzy that comes at the last part of this.
Hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now.
Yeah, and just because last time that this happened, last 2 times,
Me neither.
So I'll do the same. We can do the same for Bitcoin and ETH and look at a few other things for GMI. The other thing I was just I think you were going to point this out as well is
if you want strength, skill, and sustainability, I can almost guarantee you, you're going to waste thousands of dollars in 5, 10, 20 years of your life.
I do see a 13 daily on Bitcoin. The only problem I have with this is if we look here, kind of December time, liquidity was draining and city economic surprises had peaked. So, the two drivers, both if the market's priced off of consensus expectations and now needs to reprice stronger growth coming in versus the opposite, and liquidity is actually rising if we talk about M2 versus the opposite, which was taking place here. What's your thought on this? I mean, because it has been, the market's been trading a bit.
Well, go to the M2 chart, and there's some wiggles in that chart that give us some clarity.
Oops, that's the wrong thing. Let's go here, all the way down.
You see, there's that nice wiggle that it's not uncommon to get a slight correction. Whether this correction runs further, I think it's just forming a flag.
Well, and also if we zoom in on this, so we come to, by the way, this has been working, as I said to you before the call, this has been working really well. But if we kind of zoom in on the same chart, I don't see why this would work that well, right?
No, it shouldn't be working wiggle for wiggle, but it appears to be right now, which is weird as shit, and I don't trust it.
Yeah, neither do I. But point is that I don't think that this is unusual, and that 13 on the daily doesn't really line up with the other stuff that we're looking at. And here's the other point is yes, Bitcoin's oversold. Yes, overbought. Yes, equities are also overbought. But again, the last two times we triggered overbought readings, this was the boring zone. Remember, a long, drawn out boring zone. This was obviously Jan. But in both of these situations, liquidity was draining. And here's an RSI overbought reading, and the market just went higher. It feels much more like this than either of these two events. You know what I mean?
Yeah. It's just, I think everybody finds it frustrating because they want to just go up every day or every week, and it just doesn't work that way. It goes in spurts, and if you miss those opportunities, which is why I don't like ever being out of the market, because you miss it.
Yeah. Well, the other thing with that, which I found really funny is, Bitcoin's up like 50% off the lows or whatever it is, 40 something. And then the market drops 2%. And people were like, oh, is it over? It's like, guys, calm down, And then let me just show you let me change screens, guys, to a couple other charts here. And I'll let you share yours, which I guess you and I probably have a few of the same charts, but we might as well show mine first because they're usually better. But so this is the Bitcoin 1 hour chart, and looks a bit, messy as
it's either a flag or it's got another leg lower. It's either an ABC correction or it's a flag.
I think it's a flag, but this is kind of the range that I would watch. This is what you and I were talking about earlier when you were on the plane to Little. Looks like an inverse head and shoulders, right?
Yeah.
And then when you zoom out,
same as the Tesla one. I'll show you that in a bit, but it's interesting.
And then if you zoom out, let me remove this. This is still the big setup, isn't it?
Oh, it's gorgeous.
Yeah, and then XRP is boring, but this will explode at some point.
Yeah.
This still feels contextually like the right chart, but I think that maybe the hack kind of put it down a little bit below the intraday closing highs, which I would have preferred it didn't. But even if you draw it through the lows, it looks fine. I also think that it's really clear if you kind of just look
make. Soon it is profits that you will take. The LP Army marches strong. The best in Solana, we sing our song. We are LP Army, rise to the sky. Dynamic peace, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise! Rise, new soldiers, rise! Spot could be asked, use them all. Winning's the task, we heed the call. Who can join our ranks so tight? Listen to the Goose Gang and gain your might. We will print and we will learn. What you gain is tokens burn. Join the ranks of the brave and bold. Story of the LP Army told. We are LP Army, rise to the sky. Dynamic peace, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise! Rise! Take the course and earn your role. March with us and earn some soul. Dodge the rug and join the fight. We gain together LP Army might. Make your position and join the pool. Poach your wins with Alex's tool. LP Army, we fight to win. Your journey is about to begin. We are LP Army, rise to the sky. Dynamic peace, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise. Take the course and earn your role. March with us and earn some soul. Dodge the run and join the fight. We gain together LP Army might. Oh!
GMet, welcome to the boot camp number 16 English version. We just had our Chinese version just a little while ago, but anyway, we're here for our regular monthly Chinese. Never skip boot camp day. That's right, Alex. Thank you. Never. All right, let's get right into this for you guys. So we're gonna cover the basics today, and tomorrow will be your more advanced topics. And as always, this course is for educational purposes only. It's not going to give you an airdrop or a meta allocation or anything like that. But we hope that you will make some money learning from this course. So, you know, this is free as always. We invite you to follow along with the tasks that we do, but that's not required. Something that you should always keep in mind, especially if you're very new to this, be prepared to lose before you win. This can take some practice, and you know, consider any fees or any losses as like your tuition fee, if you will. That's just one way to look at it. Our disclaimer, of course, we're not financial advisors. So, you know, this is at your own risk. The TLDR here is, of course, NFA DYOR. Yeah, so moving on. So this is me. I'm your instructor for today. I am Heavy Metal Cook, if you don't know me. I am always busy volunteering with something, or I have a regular day job in addition to this one. Love to cook, I lift weights, love heavy metal, obviously. Been around for a while, but that's me. Photon Magic is here to help with Q&A, as is Magico, which I don't have a slide ready for him, but they're here. They're going to help in chat with answering questions and what have you. So appreciate you guys showing up today and to help out. So thank you. And so we encourage you to use that chat for your questions. They're going to answer those best we can. And of course, I appreciate feedback on this course. So if you have any suggestions, share it with us in the Discord. Let us know. You do need to complete both days of this course to graduate, day 1 and day 2. Now, if you have previously passed day 1 from a previous boot camp, you don't need to complete today to do day 2 and graduate. But you have to have the boot camp trainee role in the Discord in order to graduate day 2. So anyway, let's move on. And here are some resources for you guys. It's just additional links, additional reading. There's some good X accounts there to follow for more educational content. We'll show this again later, but you can scan that with your phone, or if you're using Google Chrome on a PC, you can use Google Lens to scan that. It's just a document with lots of extra info. So just giving you guys just a second to read that or scan that. Yep, we will show it again later. So I'm going to move on. So here's everything that we're going to cover today, things you should know by the end. We're going to cover all the areas and basic functions available on Meteora, and a few basic third-party tools that you'll need. And we'll give you a good tour of everything. So this is what you should see. And we're going to jump right into it with some DeFi terms. So what is liquidity? This is just a quick recap. Maybe most of you already know it, but we're gonna cover this real quick. Someone in the Discord asked for this. Market makers are those who provide liquidity and depth in the market. In crypto, market makers are centralized exchanges such as like Coinbase or Kraken, and they typically work on electronic market systems with bid and ask order books. They make money on the bid-ask spread. The spread is usually very small, so they make money on very high volumes. They do this using high-frequency trading. Market makers typically have huge amounts of cash and assets that they both buy and sell. In DeFi, we are the market makers. We are the liquidity providers. So for any swap to happen out there, there must be liquidity. Somebody has to put up their tokens that willing for people to swap with. Without that, no trades happen in DeFi. So that's what's required for this to happen. So it's basically you are providing the goods for people to trade with. So now the definitions of an AMM, or automated market maker, that's how that happens. On the blockchain itself, LPing, obviously it stands for a few different things, and it's all about the context, right? Liquidity provider, liquidity pool, liquidity providing. It's even used as a verb, LPing. So, and LPers, the reason why anybody does this is because they get paid in fees to provide said liquidity. As those trades come through, we collect a fee for that. That's what you get paid to do it. So that's how it is. There are many different AMM protocols on different blockchains, like on Ethereum. There's like Uniswap and Sushi Swap, Pancake Swap, Trader Joe on Avalanche. Solana obviously has like Meteor, Orca, Radium, Saber, and others. So what's a CLMM? That's a concentrated liquidity market maker. It allows liquidity providers to concentrate their liquidity within a specific price range. It can help the LP or the liquidity provider earn more fees by specifying that range. And it also helps traders because it reduces the price impact of their trades in liquidity pools. Uniswap v3 was the first to introduce this on the Ethereum chain. And like Radium and Orca, they operate a CLMM. And so here's a graphical representation of that. So you can see here in the standard AMM, here we go. In the standard AMM, liquidity is basically, it's spread out from 0 to infinity, okay? And so why that's capital inefficient is because if you look here, say the trading is all happening between $30 and $35. Well, all this liquidity out here on the edges is unused. It's just spread out. And so it's not very capital efficient with your money. On a CLMM, like I said before, you can concentrate that liquidity where the price action is happening. So like this here, there's just a little bit out here on the edges in case the price swings, but you're focusing it all right here, and that maximizes your fees and all of these things. Of course, you know, there's a downside to that. Whenever it goes out of the range, you are no longer providing liquidity, and you know, we'll get into impermanent loss and whatnot here in a bit, but this is the standard difference. So some points that I would like for you to remember: that LPing is not staking. It's not trading. In one sense, you can look at it that way because you're swapping tokens one for the other, but you're not directly trading. LPing is like, it's a high volume, low margin business. The high demand assets, you know, they can have a lot of volume, and that helps you achieve your profit. But it can also go bad for you quickly. Like, think of it like a produce business, if you will. You want to move that stuff quickly before it goes bad. And something else that it always kind of keep in mind, that I operate on the assumption that all memes are going to go to zero. If you just make that assumption from the get-go, you're going to do better. Obviously, not everything does die right away, but those tend to be the exception and not the rule. But if you just make that assumption, don't get greedy, don't stay in too long, watch yourself, that'll help keep you from getting wrecked. Obviously, long-term tokens can be a whole lot safer play for you. You know, if you want to deal with stables or established projects, you know, that can be a better way to preserve your capital, less risk. But of course, it comes with a lower return in general. It's really kind of like in a casino, the more you bet, the more you can win, but also the more you can lose. Anyway, moving on. Some more definition for you. TVL, or total value lock. It's very simple. The total value of all the assets within a pool, a protocol, the blockchain at any moment given in time. Sometimes it depends on the context. It could be for the entire market. It could be just for your liquidity. It could just be for a specific pool. There's context there, but that's what it means. Volume, and something that I like to say, volume is king. Remember that. It's just the amount of trading over a given period of time. Also, usually listed in a US dollar value over the last 24 hours, but it can be measured in any way. Volatility, and this is another key word that I need you guys to remember. It's the measure of how much price is moving up and down over a given period of time. Volatility is just the up and down, like fast. The more it goes up and down instead of staying flat or just a general trend of up or down on the price chart, that's less volatility. So big jumps and up and down a lot, that's volatility, and volatility can be awesome. Slippage, any difference in price? So you've probably experienced this before. If you're just doing a trade, you would say, I want to trade this token for that token. It's this price. I hit submit, and the price can actually change between the time you hit submit and the time that it actually executes. So you may get more or less. That's the slippage. Price impact, the effect that swap has on the price. This can depend on market depth. So if there is a lot of TVL or market cap, which is our next, any given trade will have less impact than a bigger one will. If something is a low market cap, trades will have more impact percentage-wise on that, and that can actually cause more volatility. So that's why memes that have a low market cap, swaps on it can create more volatility than something with a really high market cap. So now we're going to do a little bit of demo, getting to vaults and our dynamic pools. So I can just stop sharing that and get to here we go. Okay. All right. So starting with here on the app.meteora.ag page, we are going to go to here first to the vaults. So I just want to explain the dynamic vaults. It's just basically a place to deposit money, and it's used in lending protocols. The money goes out and you earn a yield on it, like Camino, Save. These guys are using the Sol Lend. You can see the return here, and you actually can deposit here. Now, I don't actually recommend that you deposit in the vaults. It's a very safe place to park money. If you want, you will earn some return on it. You may find a better APY somewhere else. But one thing that's important, and we will discuss this more later, you're not earning any points off of any deposits within the vaults. But there is a purpose, there is a reason for these, for this to exist. But the dynamic vaults are very cool. So now we're going to talk about dynamic pools, also known as the DAM V1. So the first thing that you need to know, this is like a standard AMM. So the liquidity is not really concentrated here. with the one exception of the USDC USDT pool that is a little concentrated. But you'll notice here in the list, anything that has the Meteor logo, that pool was created by the Meteor team itself. But these are permissionless. Anyone can create a pool. We don't cover pool creation during this course, but anybody can. So obviously deposit into these things with caution. I'm going to go into the USDC USDT pool, my first example. You can see I have a small deposit in here. So we're seeing the TVL for this specific pool. And then you'll notice here the liquidity allocation between these two tokens, USDC and USDT. You'll notice that it's not 50-50. A lot of people will assume that dynamic pools are a 50-50 allocation. It is not. It all depends on the market, the trading, what's happening with this. You'll see the current pool price. So this is the price for this particular pool at this time. Now we have something called the virtual price, and virtual price starts to get a little complicated to explain. If you want to know more about the virtual price, there's links in the bootcamp resources that we provided earlier. But the key thing that you need to know about the virtual price is above one good, below one bad. So now we have the 24-hour volume. This is how much volume or trades that have come through this specific pool within the last 24 hours. The 24-hour fees, so this is how much this pool has earned in fees in the last 24 hours. And then we have something, the 24-hour yield. What is that? Well, that's where the vaults come in. So any tokens that are in a dynamic pool, they're also found within one of the vaults. That money that you deposit into this pool is getting used in those vaults for lending at the same time. And so you're earning a yield on that on top of the fees. So this is one thing that I love. This particular pool, I actually like to use it as my savings account. While obviously you're not earning crazy returns on this, I'm getting a lot better than I would if I had just deposited my cash into a bank, and this is a pretty safe play. So that's what's great about this type of pool. The liquidity provider fee, this is how much you're earning on each trade that comes through your liquidity. This one is as small as it gets. The protocol fee, this is the amount that Meteor collects off of any of those trades. This specific pool, that is 0. Other pools like permissionless pools, mean pools, whatever, the protocol fee is going to be 20% of the dynamic fee. Now this pool doesn't have a dynamic fee, but others do. And we'll talk about dynamic fees later in the course. And then there's the AMP. So AMP is also something that gets really complicated to explain. And if you want to read more about the AMP or the AMP, it's in the bootcamp resources, the Meteor documentation. Now we have charting tools here. Whatever your favorite is, out of these, you can click that and it'll take you straight to a chart for said pool. Like GMGA. This GMGN.ai is my personal favorite. I don't know why it's not showing a chart for that one, but there's that. So anyway, moving on. I'm actually going to do a withdrawal first here, just so I could show you guys a few important things about this. Sorry, I have my money in there. Okay. So when you're depositing into a dynamic pool, you can't go one-sided with this. You have to deposit both assets. However, there is a way to deposit only one token into this, but what it will do is it will automatically swap tokens into the ratio that you have. So if I deposit, say, $100 of USDC, it's going to automatically turn about $28 of that into USDT. So it creates a balanced deposit. They recommend that you always do a balanced deposit because you could lose money. In this one, it's really not so much going to happen because the value of these is basically $1. But regardless, I am going to put in $27 of only USDC just so that you can see what happens here. Okay, so 27.68 in that. Let's see. If I go to withdraw, you can see that I have $19 in USDC and just over 7 here in USDT. So that's what it does. Turn that into that. You do have a swap function on these pools where you can trade one token for the other. However, it is it does not go through Jupiter. It goes through this pool, so it's not the thing. There is a handy Jupiter swap here, and so I see Ohana making a comment here. Assume people know the basics. I understand that you may know all of this, but not everybody does. This is the course. And sorry to disappoint you here, but this is how we have to do it. So, yeah. Okay. So that's the basics for the dynamic pools. I'm going to change gears here back. Okay, so now we're going to talk about the DLMM. The Meteor is dynamic liquidity market maker. What it's got an advantage over CLMMs in that, well, it adds a lot more extra features. It allows you to better concentrate your liquidity and even do one-sided liquidity. You've also got dynamic fees which kick in. Yeah, let's see. Magica and Photon, there's a couple questions in the chat if you guys want to grab those. Okay, so now we need to talk about what bins are. The bin, in its simplest terms, is a container that holds your liquidity. It can contain an infinite amount of any 1 or 2 tokens or none at all. Only one bin can be active at a time, and only the active bin can have both assets. So 1 token, 2 different tokens. But these bins, once they're created, they exist on the blockchain forever and cannot be destroyed. They are set at a specific price point, and that can't change. They do not move, and they remain there forever. As such, when you place liquidity into a bin, you don't own that bin. You are very likely sharing the bin with all other liquidity providers who have placed their liquidity into that same price range. So going back here, we can see that token Y, token X, this is the active bin, so it's the only one that has both. Here's a real world example. As you can see on these 2 versions of BTC, this is the active bin. And the only way for this to move to the next bin is for all of one of the tokens to be swapped for the other. So once once the rest of this CBBTC is bought, then it's going to move to the next bin. It won't move until it does. So there's just another example here. You'll see this whenever you are actually using the pools, your liquidity in the pool, and then everyone else's liquidity. So you'll see it combined down here in gray in the bottom. So I hope that makes sense here. Let's go on to the next. Bin step. And this is where a lot of people get hung up. The bin step, in its simplest terms, is the difference in price between two consecutive bins. There are many different types of bin steps with it on Meteora. And there are reasons for these various sizes, but we'll get into that. Your bin steps, it translates into basis points. So like this one bin step, 1 basis point, that's 0.0001. The math for calculating that, if you like doing that sort of thing, is you take the current price, you multiply by the basis point. Of course, you have to add a 1 to the front of it, and that's how you get the next price here. And if you want to go down, just use divide. Let's see. Okay, and here's just another visual example of that. You can see the price of SOL per IO in this bin is 0.1231. And then the next one, it was 50 basis points. So you do the math, and there you go. Okay. So as you can see, I've laid out just some of the examples here. The higher the bin step, the greater difference in price. Like in this example here, we have a high bin step to cover the price from 169 to 169.25. It only required 2 bins. A smaller bin step, it does a whole lot more. Now, what you can do here is whenever you have a higher bin step, you can cover a broader range within liquidity, but smaller bin steps tend to capture more of that volume, just because it can move from one price to the next more easily. So there's pros and cons here to using both, because a smaller bin step, it'll cover a smaller price range. And if the price of a token is swinging wild one way or the other, you could go out of range quickly. So there's reasons for all the different sizes. They go up to 400 and they go all the way down to 1. Okay, and just some examples, because not every base fee is available on all bin steps. Obviously, the smaller the bin step, the smaller the base fee that is possible. So yeah, gonna keep moving here. Let's see. So yeah, we kind of already talked about this. You see, we're covering the same price range with fewer bins. On the high bin step, the low bin step requires a lot more bins to cover the same price. But here, though, these smaller ones will generate more fee events. Now, it may be a smaller fee, but you may see more volume and action come through these because the price is moving more smoothly through these smaller bins. And what's great about that is the dynamic fee. So that dynamic fee is based off of the volatility of the token. So the more it moves from one bin to the other, the higher that dynamic fee can go. And it can go all the way up to 10, which is awesome. And that dynamic fee helps you, the liquidity provider, generate more fees, and it helps offset any potential losses from such wild volatility. So, okay, move on here. So here's the basic strategies we talked about before. You know, in a CLMM, all you have, it's the liquidity is spread out flat, just like this. There's no curves to this. This is called the spot strategy, and it's a solid strategy. It's usable. You can use it on anything. It's always good, and it's also very handy to mix with other strategies. That's solid. The curve, the idea here is you're trying to focus your liquidity where you think the most price action is going to happen. USDC Sol, if it's not moving very much, you think it's all going to happen right around here, then you've put most of your liquidity right there in the middle. And in here, they've got some on the outsides in case the price swings. There is a thing called the top curve blast, which is kind of an advanced thing. People actually curving on memes. If you are new to this, I don't recommend you try that yet, but it is a thing. In stables, it's definitely the thing to use. Stable pairs. And then there's the bid ask. So it's like DCAing in and out of any position. As we all know, in trading, the basic of it is buy low, sell high, right? So when the price is going down, I want to buy more of this token at a lower price. Whenever it's going up, I want to sell more of it at a higher price. So this is what's great about the bid ask, is it sets it up that way. So let's see, let's go on to the next. So now here's where we're talking about the stacking of the strategies. This spot curve, you can see that we laid down a layer of spot, and then we put some curve on top of that. Why? Well, when you're on the curve, and say the liquidity comes all the way out to one side or the other, well, because you have less liquidity there, you're not earning very much in fees. So by adding a layer of spot there, you're still getting a little bit more of that fee generation, but you're still concentrating the most of your liquidity in that range where you want it. Same thing with the bid ask. You know, when it's right down here in the valley, you're not getting as much. So adding a layer of spot guarantees a little bit more fee generation for you. And you can do whatever percentage of that you like. You can go 50-50, you can go 30-70, or whatever amount it is that you want. We'll get deeper into that. But that's the very basics of stacking strategies. You can combine this any way you like. Before we move on, I want to say this is something that people get caught on, that they misunderstand sometimes. There's a difference between a pool and a position. Don't confuse the two. Pool is two tokens at a specific bin step and base fee, and liquidity, it contains the liquidity deposited by your wallet and anybody else that puts it in there. Pools, once they are created, they cannot be closed, they cannot be destroyed. They will exist on the Solana blockchain forever and ever. You will die before that thing goes away. Your position is your specific liquidity that you deposited, and it only exists when you deposit the tokens, and it ceases to exist whenever you close the position. And you can have as many positions in any one particular pool that you like. So here's the goals for the DLMM. There's basically two ways to achieve a profit here. You achieve a positive return from divergence loss. That's a fancy way of saying token pump all the way out of range so that you're left with, say, only SOL. And this is awesome, right? You've sold all of the other token for the token that you want to keep. Let's say it's SOL. So that's great. You're in profit and you win. The other is to achieve that positive return from fees. And this is what something that not everybody understands about liquidity providing. Even whenever the price of a token goes down, you can still be in profit if you've earned enough fees along the way. Ideal world, you've earned a whole bunch of fees and you get that positive divergence loss, or in saying that it pumps all the way out of range for you. Ideally, both are great, having the combined of that. But you can't always count on a token pumping for you out of the way. Getting enough fees, that's the goal here. Otherwise, we wouldn't do it. Now, impermanent divergent loss. This is what is going to happen the moment you deposit liquidity and the first trade comes through. It's just a divergence in price between the two tokens versus simply holding. Now, getting into this, it requires some, to really understand all the math behind it, it requires some Greek letters that I don't really know, but I did provide some links in the bootcamp resources if you want to get deeper into this. But the main thing that you need to know is that your goal as a liquidity provider is to earn more fees than any losses that you incur. Now, on a stable pair such as USDC, USDT, there's not much divergence between the price of those two tokens, so the impermanent or divergent loss is much, much less than it would be, say, for some meme token and SOL or USDC. Yeah, if you want to read more about that, but we're going to talk more about the impermanent loss and what to do about it later on in this course. So let's see. Here's an example. Let me just zoom in here. So we can see we started at a price of 170 with about 0.25 SOL and 40 USDC right there. And this is an old picture, yes, I know. We ended up at a price of about 171 USDC SOL, about 0.19 SOL and 48.49 USDC. Earned a little bit of fees there. So the position, it lost a little bit of SOL, but it gained some USDC. The net change was about 0.48 USDC. So the divergence loss was a gain in USDC. Okay, so we talked about that again. This is just another highlighting of what we talked about here. Earning enough fees to overcome your losses. The key parameters that you need for that is volume. Token needs to have enough volume, enough trades to coming through in order for you to generate those fees. The liquidity, or the TVL, you need some liquidity depth there. So this is why it's great to work with others, get into pools with others, because, you know, say you have one SOL to invest. Well, there's no liquidity depth if you're all by yourself, right? So you're not going to get as many trades. When you combine with others, that makes the swaps come through. Jupiter is looking for the best price for the trader, but there must be enough liquidity at that price for it to give the swap to the pool. And the other thing, of course, is volatility. The more volatile it is, the more fees you're going to generate. It may mean going out of range more often, but that volatility is going to trigger those dynamic fees and get you more fees. So yeah. And then, of course, as we talked about, positive divergence loss, that's just a visual representation of it, right? So it going all out of range, I'm left with all soul or whatever the token that I want, the quote token. So yeah, that's how you win. Okay, so now let's get into a tour of the DLMM. And share screen. Oh. Okay. So just here on the DLMM, just like you can with any of the dynamic pools, you can search by CA or the contract address. You can get it to suggest pools based off of things that you're holding in your wallet already. And I would remind you that these are permissionless. Anyone can create a pool. So don't assume that because you see a token here that it is a legit one. So I'm just going to type a name, for example, to show you this. I'm just going to type mask and we'll see here. So we see lots of ones like here, this one, Mask Soul and Mask Soul. And notice the difference here. This one didn't have the yellow triangle on it, and this one does. This could be a fake token. There's actually nobody messing with it. So make sure that you verify a token's address before you get in. So anyway, just messing with this one, we can see that there's 21 pools available for this particular token pair. Whenever you click that to expand, Meteor is just going to show you the top 3 that it is recommending. These are the kind of like the best performing. And you can sort all of this by TVL, the amount of volume in the last 24 hours, 30 minutes, any of these options. And of course, you can also sort by fee over TVL. Now, that's this column right here. Now, one thing that I would like to caution you about is that the 24-hour fee over TVL, this percentage, it can be misleading. And the reason for that is because it's impacted by people adding and removing liquidity from the pool. Now, the 24-hour fee, that is what it is, right? But if a whale deposits a lot of money, or just a lot of people suddenly deposit into the pool, well, that calculation is going to change. There's a lot more TVL, and so this percentage will go way down. On the reverse, if say it's generating a lot of fees, but then whales or a lot of people extract their liquidity, that number will go way up and it'll look a lot more attractive than it may actually be. So take this percentage with a grain of salt. What I personally am looking for is I'm looking at the TVL and the volume. This particular one in the last 24 hours has had $1.1 million worth of volume come through, touching this, say, $100,000 worth of TVL. So that's great. Things are being routed through this 20 bin step 0.2% fee pool. The 100, it's getting roughly double the volume for the TVL, and the 50.4 is getting a good bit. So again, these percentages may be impacted by people going in and out. Now you can show all, and you'll notice that there's a whole bunch of pools here with nothing in them. And again, anybody can create a pool. Not everybody knows the right pool to create, the right bid and step and fee percentage for that. We did an advanced boot camp on this. We're not going to go into what's the right thing to use in creating a pool. We don't get into pool creation in this course, but again, anybody can create this. It doesn't mean that it's a good one. Sometimes a pool may have a high bid step and a high fee whenever that token first launched, and that was great. But as more liquidity exists out on the blockchain, you have to move down to smaller bid step and smaller fees in order to continue to capture the volume. So yeah, and choosing the right one for you is a good question. A higher bid step is a little bit more chill. You're covering a greater price range, so you don't have to necessarily watch it as hard. You're less likely to go out of range versus a smaller bid step. It's a smaller range, so it may go quickly. You really kind of want to watch those. So that's what all these are. I'm going to go ahead and go into the 102%. Actually, you know what? Let me pick a different token entirely here. Let's go with, let's see if we can find something with some dynamic fees. Okay, so Gore Soul. There's the TVL for this specific pool. You can see here, if you click right here, you can copy this CA. You can go look at it on SolScan. You can check the rug check. I will highly recommend that you check the rug check on tokens before you get in, just to be sure. We will talk more about this in day 2 tomorrow, but that's a place that you can do that. And you can also look at bubble maps, which we'll talk about that. So again, bin step base fee, the max fee, it's always 10%. And that's the max that it can ever be on any particular pool. The protocol fee, this is the amount that Meteor is getting off of any trade, and it's based off of the dynamic fee. On the DLMM, it's just 5%. Now here we can see the dynamic fee. There's only a little bit of volatility on this token pair at this given time, so it's not very high right now. But the higher the dynamic fee, in my opinion, the better, because you're making more per. And then there's just, of course, the 24-hour fee. Beyond Hand is asking a question: is there a major difference between version 1 and version 2? There are several differences. V2 is currently still in beta, and that's why I'm showing you V1 today, because I don't want to pull something up and it not work. But the basic concepts here are the same. I mean, it's the same pools, you know, the trades are all the same. So that's why I'm sticking with V1 for this particular course. Of course, you have your pool charts. Down here, you can see the trading volume. This is the trading volume for this particular pool. It can show up to a week here. So you can just see where it's been, how it's been performing. Obviously, volume almost always drops off on weekends. So this is kind of normal to see. Then, of course, your liquidity, current pool price, blah, blah, blah. You can swap that back and forth. It has no impact on the actual pool itself, how it operates, if you just want to see what the price is for this pool. Now, something that's important for you to understand is that a current pool price can be different from pool to pool. And that's not true. That's not true just on Meteora, but across the entire market. If you were to look at a list of all the pools out on the Solana blockchain for any given pair, you're going to see difference in prices. That difference, it depends on trades coming through the pool itself. Price doesn't move without trades hitting it. So yeah, okay. Just like I showed you in the dynamic pools, you have a swap function. This swaps directly within the pool itself, so you may not be getting the best price. I don't recommend using it. I recommend using Jupiter itself. You're going to get the best trade out there. Let's see, a couple other settings to show you here. Liquidity slippage. Okay, so you may already understand swap slippage, right? You use Jupiter, you may need to increase your swap slippage if something's very volatile, right? And otherwise your transactions fail, or if you're using Jupe Mobile, it just works. But liquidity slippage is different. Whenever you go to deposit, if something's very volatile and it's swinging back and forth, by the time you click add liquidity and it actually the transaction completing and adding it, that price may move and it may not end up where you want. The liquidity slippage helps protect you from depositing the way you didn't want. If you set it really low and you're messing with very volatile coins, you may have problems. So you can set your own percentage here to whatever you're willing to accept. A lot of your hardcore degens like to set this pretty high. I think I'm still being conservative in comparison to what other people are doing, but that's that function there. And I'll go ahead and show, well, no, actually, I'm going to get back to that. So now I'm going to show you guys basically the add liquidity. I'll do two-sided, so I'm going to buy just a tiny bit of this token, 0.1, swap. Okay, so now I have some. I want to add a position. There's two ways to do this. If you use the autofill function, whatever you hit here, it's going to match it in the other token, in this case SOL. So I have bought about 0.1 of that token and it's matching it here. Now I can come down here and I can move the price range to where I want. It's still the same price, but you see that I've added a lot more SOL on this. And you notice I didn't touch that, it moved on its own. So this is going to stay current with whatever the pool's price is. If you want to say, set this, if you think there's a lot more upside on this, you can set it this way or whatever you want. Okay. It's just going to balance that. Now, alternatively, you can set it to whatever you think. And if you go one-sided, it's going to automatically set it like this. But you can move the slider. And let's say that I wanted to put in one whole SOL for that. It's going to do it that way. So you can have whatever you want here. That's up to you. I'm just going to go something small. So again, you can set your strategy to spot, curve, bid ask. And then down here, you can shorten the range. The maximum for any particular position is 69 bins, no matter what bin step you're using. But you can shorten that here. And you can also, of course, enter your own percentages or min price and max price. You can set that all on your own. But I'm going to do a straight spot right here. Like so. I'm going to go down. Actually, let's see what it is. This is a 20 bin step pool, so I'm going to go max range on this actually, because there's not much difference in price. Only -7 on the down and 6 on the up. And then one more thing before I deposit, this is something that I want you guys to pay attention to because it's where so many people get caught. They're not paying attention. This is telling you how much it's going to cost you to deposit this. And it's telling me to create one position, it's going to cost me 0.05 SOL. I'm going to click on that to give me the better breakdown of this. It's telling me that here's the position cost and that it's refundable. So whenever I close this position, I will get that money back. It's possible to create a position, or if you're depositing into a new liquidity pool where there's never been any liquidity before, you may have to create bin arrays. And for fun, I'm going to show you guys what that looks like. Let's see if we can make it happen. Yeah, we just made it angry. Okay. So to create this many positions, good Lord. I'm going to show the cost breakdown. So I've got to create bin arrays. And because I went so insanely high, it's like 46 bin arrays. That's going to cost me a whole lot more SOL. But here's the thing, it's not refundable. Because bin arrays can't be destroyed, they exist forever on the blockchain. You can't get that rent back. It costs 0.07 SOL per bin array. So pay attention whenever you're depositing here, what you're paying for, because there is no refund on that. Let's see, let me reset this here. Okay, so question, what's the difference between the top spot curve bid-ask range that's being shifted from the smaller range below it? I'm not sure what you're asking here. I'm not clear on that one. Magica, do you know what he's saying?
No clue. Trying to understand as well.
Yeah, I don't know. I'm sorry, JD, maybe phrase it a different way. Oh, okay. What's the difference? Yeah, I mean, you can, I'm not really sure what you're trying to ask. I'm sorry. Let me get the deposit in while we're waiting. I'm going to do half spot here. Okay. All right. So I'm going to add more. Actually, let me go here, see if I can answer this question. So, right. So here I'm saying, give me fewer bins so I can concentrate my liquidity even more. You'll see it's 24 bins and not 69. If I think that all the trading is going to happen within this particular range, I may want to focus all of my liquidity here. So I'll go with the smaller number instead of the full range. What strategy you use here, it's still the same range whether you're using spot curve bid-ask. But anyway, I can see here, this is my liquidity, my total liquidity. I'm going to add some more to the position. I'm going to put the rest in, and I'm going to do it with the bid-ask here. And there we go. So I've got half spot, half bid ask. And I can see down here in the gray where we talked about before, you can see my percentage. So on my last bin, I have 0.04% of all the sold in this particular pool is in this bin, and so on and so forth. Someone right here has put a lot of liquidity into one bin. I don't know why, but you can see here that we're already getting some price action. That thing is moving down. I'm earning some fees here. Granted, it's not a lot because I haven't put a whole lot of money in, but hopefully it offsets any of my losses. You don't have to wait for this to pump out of range. Again, that's ideal, but the closer you are to where you entered, the less impermanent loss that you have. And that's true either up or down. So in a perfect world, if I want zero impermanent loss, I would draw right where I entered. Of course, it's not always easy to hit that mark, but that's one way to do it. So I guess my point is that you don't have to wait for this thing to pump all the way out of range. If you're somewhere anywhere at or above where you entered and you've earned some fees, you're in profit. Okay. If it's down below and you haven't yet earned enough fees to offset that loss, then you're in a loss. So you need to wait, earn, and we'll talk more about what to do about that tomorrow. But that's how you get a deposit in. Now I'm going to show you some cool stuff with the withdrawals. Now, if I just want to say I'm done, I've earned whatever I wanted to earn, I can hit withdraw and close position. That'll withdraw all of my liquidity. It'll claim all of my fees. It'll close my position. I'll get my 0.05 SOL in rent back. Done and done. I fully exited. You can, of course, just withdraw the liquidity without claiming fees or closing the position. I mean, why you would do that 100% and not close it, I don't know. But you can choose however much you want. You can set that. The other great thing is you can choose to pull out only one of the tokens. So if you only want to pull out your SOL, you can choose that. Now this drop down here, show liquidity withdrawal, you can see here where you can actually define this. And again, you can use percentages of that. Say, I just want to pull out that much SOL. So whatever you highlight, that's what it's going to pull out. You can pull this out. You can reposition it. Say you wanted to preserve your SOL, or you wanted to deploy it in a different strategy, you totally can. I will withdraw just this SOL to give you an example here. This is not recommended moves. I'm just giving you an example here. So I'm going to put in, let's just say 0.3. Say I want to put it in as a curve. You can totally do that. Or if you want to change it to spot, you can. Or bid ask, whatever. You can do funky stuff with these things this way. And that, my friends, is how you make funky shapes and art. But anyway, those are the cool things that you can do with the withdrawal. Of course, you can claim your fees at any time you wish. And if you have multiple positions open, this handy button here at the top to claim all fees, it'll claim all your open positions. And if you just want to exit everything, you can do that as well. So let's see, I don't think I have any more questions on this. This stuff is pretty cut and dry. A couple other things that I want to show you here at the top. Priority, your global priority fee, this setting. I would recommend that you set it as low as you can get away with. Whenever the network is busier, you may want to increase this. It's going to cost you more per transaction, but it may help you land those. You can use the Jito bundles, or you can use a mix of these. You can, of course, define a max cap for this fee mode. Like if the transaction fee exceeds this, then I want you to fail because I don't want to pay more than that. You can set that to be whatever it is you want. You can also choose to pay an exact fee. So if I select that, every time I do a transaction, it's going to cost me this much. And whenever things get insane, I've seen people do that. But generally speaking, you're never going to need a reason to do that. So yeah. So yeah, in this question, one big bin could be some sort of market mating holder the price in a certain range. Sometimes it's just one of the LPs doing that. They think that some price is going to happen there. It can be crazy. If there is enough liquidity in that bin to hold the price, and there's not enough trades for it to move out of that bin, then yes, it will sit there. But of course, you know, in order for you to do that, it's going to cost a lot of liquidity, and it's going to depend on what's moving. It's kind of goofy to see. Sometimes you'll actually see it in the chart. But again, not recommended. No, not really. You want a DCA out of something, you need to be using the bid ask and define that bigger range. Okay, more settings. You can set your preferred Explorer here, whatever it is that you like. The default is SoulScan. Your RPC, you have these choices. If you have your own custom RPC, you can change that here. If you're having trouble with the site loading or things happening, screens loading, whatever, you can change your RPC here. They've been mostly stable recently, but I have seen in the past where it's like, oh, this is not updating, and you go and you change your RPC and everything working again. Well, that's where you find that. The next is the notification bell. So you can have a notification for if you're out of range on a DLMM position. This will send you a notify. So you sign with your wallet. There's not going to cost you anything to do it. And you can have notifications in the app. You can connect your Telegram. You enter your Telegram username and you click it. You follow the directions. It's very easy, but it'll notify you via Telegram. If it's an unknown token, you will see it say unknown. If it's not a verified token, it'll say it this way. I don't really like it that way, but it is what it is. And of course, you can have it email you. If you like a lot of email, you can choose that option. But this is just the thing. It won't tell you if you're out of range on the upside or the downside. It's a feature I've requested, but they haven't been able to implement that. That's all done through Dialect. They're the ones who do that. So look here. I'm actually in profit here. Not very much profit, but I could, if I wanted at this point, withdraw and call it a W. Yeah. All right. So let's see. Magic of Photon. Have I missed anything here? Oh, something here. Something else that you can do here is you can, if you click where it says total liquidity or fees earned, you can click that and it'll show you, it'll switch from USDC to Sol. So if that makes more sense. And it also changes it down here, the values for that. Your fees earned, claimed, that won't update until you actually claim fees. So yeah. And the thing about fees earned, so I'm just going to go ahead and claim the fees just to show the example. Hopefully it'll update. Okay. Update. Sometimes there can be a delay with the API. Oh, there we go. So it shows me this 15 cents in fees earned, and if I hover, it'll give me a breakdown of how much in the two tokens. It's something I forgot to mention about the dynamic pools earlier. It will not show you the DAM V1. It will not show you fees earned. Fees are automatically compounded back into that pool. The only way to know what your P&L there is you need to make a note of what you deposited versus what you can withdraw. So you can't claim those fees separately. The DLMM, the fees are not auto compounded back into the pool. They just sit there until you claim them. Now, even if the price of this token dumps, the fees earned claim will not change. It'll remain this forever. So that part is static, even if the price goes down. We're actually almost in a complete positive divergent loss. That's awesome. And then portfolio is cool. I can see all of that. Oh, and it's actually showing me out of range. I can see all my deposits throughout everywhere. My dynamic pools, my DLMM, V2. If you have a farm, it's in there. So we're actually, why is it showing? Weird. I guess it dropped between now and then. All right. So Magic of Photon, did I miss anything? Before we move on?
Sir.
Okay. All right.
Everything's fine for me, I think.
Okay. Cool. Let's get back to the presentation, see what's next. Okay. So here we are already at the QR code for today's form. We don't share this on X. We don't share it in Discord because we want you to watch the video. Go ahead and scan this. You'll fill out the form, enter your answer the questions on the form. And I'm actually going to go back and show you guys some more things on this in the DLMM, but I'll give you guys some time here to scan this. You have until 5 p.m. UTC on June 29th to submit this form. So you have over a week. You will need this to graduate this course. If you have it from a previous one, okay, no worries, you don't have to submit it again. But if you don't have bootcamp training in the Meteor Discord, you do need to complete this to get your day one. Sometimes people ask what's the difference between LP Army Private and LP Army. And LP Army Private is someone who's fully graduated the bootcamp course. LP Army is a rare and very special honor given to people who make great contributions to the community. So anyway, if you submit this and ask me in 3 days from now, where's my role, I'm going to know you weren't paying attention, because I'm not going to issue any roles or grade any forms until the forms close at 5 p.m. on June 29th, UTC. So there we go. You can, like, if you're on PC, and you're running Google Chrome, you can use Google Lens to scan that, but and do that on your PC, or you can scan it on your phone and then send it, like email it to yourself, whatever. But we don't like post the links to these forms anywhere. This is the only way. So there you go. I'll give you guys just another second and I'll check questions. Jojo, you should be able to pass this easy, bro. I've seen you in the Discord for a while. Okay. We are not done. Still got a few more things to show you guys, so don't leave yet. But I will come back. You're all good, Ohana. You're all good. Don't worry, man. Share. Oh, sweet. Positive. I'm just gonna close all this. Exit. We have a win. I'm going to hit this generate my P&L. It's going to automatically generate my P&L for me using the great community tool metlex.io. This does take a minute. And if you ever are running this and it just spins or it's not fully showing your P&L, it could just be a delay in the API. Metlex is not broken, just sometimes there's a delay in the API. But you can see here, we made a whole $1.15 off of that. A 1.57% return. Woohoo, we're rich. Yeah, I'll come back to the QR code here in just a minute, so don't worry. But yeah, that's how you do that. And right here we can see the community built-in tools. So the DM P&L and points tracker, that is metlex.io. We'll talk more about these tools tomorrow, but and also GeekLad's profit analysis. Those are linked from every pool. And I wanted to, something else I wanted to show you guys. I forgot to show you, and this is going to be really important. So let's find this one. I'm just picking a token here. So we can see Oscar, this token, it's got this caution symbol on it, the caution triangle with the exclamation point on it. If I hover over that, it tells me it's an unknown token that is either not listed on Jupyter or not verified yet. So that caution symbol, it only means that it's not verified on Jupyter. Meteor uses Jupyter's strict list or verified list to do this. It's not something Meteor figures out. It gets it straight from Jupyter. That's what it means. It doesn't necessarily mean that it's a bad token, that it's a rug or anything like that. All it means is that it's not verified. So proceed with caution. If you see something that's like, say you wanted to LP Jupe and you saw that caution symbol on Jupe and you know, hey, that's a verified token. Well, then you're probably looking at a scam token. So just be careful. It doesn't necessarily mean that the token's bad. It just means it's not verified. So keep that in mind, guys. And one thing that I forgot to touch on was farms. They're not really used a whole lot, but pools with farms, I'll go ahead and talk about it. So this is just a way to earn additional rewards from the dam V1. They're not permissionless though. I'm going to go into the Soul VSOL and show you guys this here. So this is still just a regular dam V1, right? I'm just going to put in a tiny bit. I'm going to let it balance for me because I don't actually own any VSOL here. And it'll auto swap for me. Okay. Oh, and something else that you guys should know. There's no rent to deposit it into the dam. You're provided with an LP token. So you'll see that in your wallet, an actual Meteor LP token. DLMM does not provide you with an LP token or NFT, hence the rent on the Solana blockchain. So difference between the two, something you should know. Okay. So anyway, I have a deposit of $7 into this particular dam V1 pool. There's a link right here for the farm. It's going to take me directly to that farm. And so I can see that here. I can deposit my LP token into this farm. And then you can start earning some rewards off of that. Now here's the thing that you really need to pay attention to on farms. If it says weekly rewards, let me zoom in here. Whoa. If it says weekly rewards, then this farm has rewards to give. If it does not have that, then that pool, that farm is currently not issuing any weekly rewards. And you'll notice that the vast majority of these farms, there's nothing here, only some of them. The rewards for farms are not provided by Meteor, it's provided by the particular project in themselves. So it's upon that project to provide those rewards. If we're looking here, like Bonk is currently not providing any rewards. So depositing an LP token into this farm will yield you nothing. VSOL, or the Vault, is currently providing 2.11 million weekly rewards. And so you're getting VPT tokens as a reward for that. While depositing into a pool will earn you MET points, depositing into a farm or a vault will not. Now, of course, if you want to withdraw your Soul VSOL from the pool, it will not let you do so until you withdraw from the farm. Okay, so I think everybody is probably thoroughly bored with that. Let me get back to the presentation. There we go. So one last chance to scan the form. Diego, there's your chance. There's the QR code. Of course, if you miss it, you can always go back to the recording. We keep all of these recorded on YouTube and X, so you can rewatch it at any time. So we have 30 minutes. More questions. I have a few more things to show you guys. Okay. And moving on. Okay, so point system. This is a very simple point system. You're getting 1 point per $1 of TVL per day, so every 24 hours. They do a snapshot at a random time every day. For every $1 value of liquidity that you're providing into a pool, you're getting 1 point for that. Of course, if you are in a pool for only 5 minutes and you're not, and that 5 minutes didn't happen within the one snapshot for the day, you're not going to get counted for that. But the big thing is, for every $1 of fees that you earn, you're getting 1,000 points. So that's where it is. Again, vaults do not receive points. Farms don't. It's just liquidity pools. There is currently no official points checker. There are some community tools such as Metlex and GeekLad's tool that they can estimate points, but that's only off a DLMM. The team is working on an official points checker. It's coming. They're moving closer and closer. There's just a lot of technical things, because how you calculate between the DLMM and the DAM, that's very hard, but there are people working on it. There are proposals to modify this plan, or some additions to it. If you want to learn more, or you want to make your voice be heard, go to proposals.meteora.ag. Put that out there for yourself. Anybody can comment. Just a little bit about the LP Army community. At the base, we have the team. They're in green in the Meteor Discord. Then you have the LP Army leads. Yeah, where do you see those points? Well, there isn't an official points checker yet. It's coming. So, yeah. Then there's the LP Army leads. I am one of them, one of 3 currently. Mario and Alex are the others. We're leading certain initiatives within the LP Army. Then we have our LP Army moderators, Photon Magic, Magica. They're here with us today. They are moderators. Moderators is a volunteer position, but they help with tickets and just various things within the Discord. The LP Army is that honored position. There's a little over 200 of them throughout, just people who have made significant contributions to the LP Army and Meteora over time, being helpful, being active. Maybe they developed a tool or guides, or a lot of educational content, or whatever it is. They get recognized. They're selected by the mods. We get together, we talk about it, we approve new members. LP Army Private, that's just somebody who graduates boot camp, and I hope that every single one of you who are here today graduates. Boot camp trainee, that's just somebody who passed day 1 today. LP Army Private, that's for tomorrow. We have 2 Discords. The Meteor Discord. Meteor Discord is for questions, help about the product itself. General questions. You can get a little bit of DGen and info strategy in the Show Off Your Curves channel. It's less active now that we have the LP Army Discord, but it's still there. Of course, you can give feedback. There's various channels, so if you need to give feedback about the DLMM or the DAM V1 or the DAM V2, there's specific channels for that there. And of course, some different language channels. If you need help in your language, and we have that language channel, it's there. Just go down to the international role channel, select your language, and you'll get access to that. I think we currently have Spanish, Portuguese, French, Filipino, Chinese, Russian. Did I miss any? There's a Czech, Slovak one. Anyway, we add them as community needs them, or as we get demand for it. Then, okay, so LP Army Discord, this is the great place for you to work with other people, liquidity providers. You can get alpha on good tokens to do. You want to ask about a strategy. This is a great place to do it. And we'll actually be in there after this class today on the bootcamp stage to answer any additional questions if you want to come up and ask. That's that there. And actually, there's a QR code for the LP Army Discord. Look for the channel bootcamp stage. I'll spin that up here shortly, right after this course ends today. So again, you feel free to ask those questions. Anything that we covered during class today, we're happy to help answer those questions. So we'll be there for a bit right after that. Let's see. Yep. Okay. Here's the bootcamp resources again. Just links to additional reading, good X accounts to follow, documentation, all that stuff. Let's see if we have any other questions. Photon Magica, I think we covered everything. You guys have anything to add, comment?
Not, hey, great session, great course. Have a battle. I think we cover everything. Tomorrow we will have a lot of questions and a lot of things to show. So
Yeah. No, Hannah, there is nothing wrong. Please ask questions. We don't mind. The more you want to learn, I mean, people, if you're out asking genuine questions, we don't mind, and we love it. That's what we're here for. Yep. Yeah, and strategy related, that's great. And we are going to talk more strategy tomorrow. And Magica does a LP Army TV. Magica, we got some time. You want to tell the people all about that since you're here?
for sure, we're gonna official launch the Twitch unit this week, and we're gonna have a launch party next Saturday. We're gonna give away some small money to people that watch. Our Twitch channel is more focused on new people that are coming to Meteora and want to learn how to start. So I usually stream 5 to 6 days a week for more than 5 hours on Twitch. And we teach small and initial strategies. So if you want to learn how to start on Meteora, you don't have a lot of liquidity and want to hang out, listen to music, and ask questions for me, I'll be there every single day. So we're gonna post on the Discord if you want to. Every time I'm online on the LP Army Discord is because the Twitch stream is live. So just hang it out with us on the Discord, and we're gonna see me there and join, ask questions. And I love to engage with people, and I'm there every single day. So you, Ohana, if you have any questions, come join, and I can help you with anything if I can. So that's it. This week we're gonna announce to everyone, and I hope you guys join for our party.
Thank you, Magica. That's awesome. So LP Army TV on Twitch, and check the LP Army Discord for announcements. That's awesome. Thank you. Fantastic. And appreciate you leading that. That's going to be great. I think a guy named Gosha does something called DLMM Night Live or something. Magica, do you know what time UTC you do the streams?
My time zone is UTC less 3, down 3. I don't know how to say that. -3, yes. My time zone is UTC -3. So I start probably 8 p.m. UTC for you if you to like the 01. So around all my streams at night. So it would probably be later for you guys.
Yeah. And you're in Brazil, so
Yes.
so
In my time zone, it starts 5 p.m., but for most of people, will be later. So join.
yeah. Diego, you don't have to fill out the form. It's going to be open for 1 week. You have until 5 p.m. UTC on June 29th. So today is the 21st. You have until the 29th to submit that at 5 p.m. UTC. The form will be closed and we will not accept any additional submissions after that. You would have to wait for the next bootcamp. So, all right. Any other questions that anybody else have? Or we can give you guys back time and end it early.
I think we could end it early because we're gonna go hop on Discord right now and answer people. So
Sure. Yep. Awesome. Okay. Well, we will end today's session with a song about the dead. That is the original sub DAO on Meteora. The dead token. You want to learn more about that, you can imdead.xyz, and that's DED. So we're going to rock that out and take off. We will see you guys all tomorrow. Thank you again, Photon and Magica, for helping out today. And thank